Okay, good morning everybody, and thank you for having me back. As David said, I'll try and give you a top-down view again of how we view North Africa, and also by proxy how potentially the financial market thinks about North Africa in terms of opportunity and value. So I'm going to start with a section on production in North Africa with a bit of history and outlook, and then a little bit on the second part being exploration. So if we jump straight into the production, I thought I'd just put up some charts and really give you a sense of how much oil is coming out of North Africa combined. And on the left-hand side, we have Algeria, Egypt, and Libya stacked here. And you can see it's doing about 3.3 million barrels per day of production. So, 4-5% of global oil production coming out of the three big producers in North Africa. You can see, however, that once you get up to 2004, 2005, we're kind of running across a plateau here. So we have plateaued, not saying we've peaked, but we're certainly reached some level of plateau. The big dip here, as you remember, is Libya coming offline during that particular event. The dips here are also interesting. This is back in the late part of 2008, going into 2009. This is certainly when Algeria and Libya, as part of OPEC, decided to cut back production. It just shows you how rapidly they can do that. And that's what happened. They pulled that back and helped the oil price actually recover from $40 going back closer to $90 in that period of time. So the flexibility still exists. But I guess when you think about that flexibility on the right-hand side, because this is what the market focuses on a lot, spare capacity, how much of a buffer do we have in the overall global supply system. And during that period I just described of late 2008 into 2009, the green here Algeria, the blue being Libya, this is the spare capacity naturally went up because you stopped production. But you can just see what's happened here over the last couple of years into 2012. Production will have declined naturally. The countries will have produced out of that buffer. So ultimately, into 2013, we're running at very low levels of ultimate spare capacity in North Africa. So there's, if things do happen, political events or whatever, we don't have a lot of surplus supply in this part of the world. So that's a little bit on the oil production so far. And I just want to go back because I think it was remarkable how fast Libya fell, but how quickly it came back. I mean, a lot of people started talking about tribal warfare and damaged infrastructure, et cetera, but the green line here is Libyan production going into the whole period with Gaddafi. Ultimately, production in the green line went from 100% down to 0 by the middle of 2011. And then it was a question of whether it would ever come back. And, we started looking at some analogs back in Iraq, back in Venezuela in 2002, 2003, and Iraq 2003. And, all of these regions are remarkable in terms of recovering the oil supply again. This being the recovery in Iraq, this being the recovery in Venezuela post the strikes, and then this being the recovery in Libya coming into last year and ultimately getting back to about 90% of the pre-production levels. So phenomenal recovery here whenever there's naturally lots of questions about that phenomenon. The other good thing about North Africa, so it's not just, well, they used to have some flexibility, they don't have it today. Their infrastructure seems perfectly capable of falling and getting back. The other positive is just the oil is very light, sweet, and gains a premium. So this is simply saying the oil price relative to Brent. So when we're up here, you're trading at above the zero line, you're trading at a premium. So, $1 to $2 per barrel extra revenue for every producer who flows crude out of this particular region, just because of the quality of the oil. So again, a big incentive for operators to stay within this region. If we look at natural gas, also a very important part of the gas system. Again, it's about 5% of global gas supply coming from Algeria, Egypt, and Libya. And unlike the oil, there's been a much better growth profile here in natural gas. And we've come all the way up to about 15, 16 billion cubic feet per day of natural gas, being largely Algeria and Egypt. And the big questions of maybe it's plateaued here a bit, but probably a little bit too early to say. But this is a much stronger case here. that's very important because here in Europe, we need the North African supply. It's the black area here. It's a combination of these, and it's closer to 10% of European supply. So it's a crucial part, not as important as Russia or LNG or Norway, but certainly as important as some of the domestic supply in the Netherlands or the UK or Denmark. So it's a crucial part. And I guess the good thing about it is if we look at certainly last year and the last couple of years, it is still growing, as we alluded to earlier. Last year, some of the big supply areas into Europe really suffered. I mean, the UK fell 17%. Russia didn't really fall, but they didn't push in as much volume last year, so 16% decline. Denmark naturally declining 14%. Netherlands is kind of flat as they maintain their production levels, but North Africa managed to increase supply 6% last year and really helping to balance the system here. The LNG, the liquefied gas that normally came in, was just simply being attracted over to Asia because of the much higher prices. So it was good that we had North Africa to kind of bump up their volumes and help out the balance in terms of European gas supply. Looking outwards, then you just have to take a glimpse of the reserves that this region has in blue. And this is simply plotting current gas reserves divided by current production and telling you that number in number of years, and whether we have 40 or 60 or 100 years here in Egypt, Algeria and Libya. You can tell there's an awful lot of gas there, and I think Europe desperately needs this. The problem is infrastructure, which typically causes these bottlenecks time and time again, and you just have to look at a map of kind of North Africa here and look at the red lines being gas and the green lines being oil. And, as you know, it kind of all comes through here, through Morocco, up into Spain and up into Sicily and up into Italy. And that's the two junctures to get that supply into Europe. So it's not a lot. I'm going to show you the rest of some other areas in a second, but it's this area and this area. And then there's actually 5 LNG terminals, 2 in Algeria, 1 in Libya, and 2 in Egypt. So we've 2 main pipe networks and 5 LNG systems to float it out by tanker across into Europe. It has been problematic, and you will have heard about some problems with Egyptian LNG from a BG field, which is not quite filled with as much gas as the company thought. We have had problems at the Skida LNG terminal in Algeria back in 2004. It did explode. It's 100% operated by Sonatrach. It's one of the only real examples of an LNG terminal exploding, but it did happen here. And today we have this reservoir issue over in Egypt. So we have a lot of reserves. We do have some infrastructure to get out, but not a lot. And with the LNG exports, it's not quite clear cut either. I just wanted to look at other areas, because if we look at the North Sea or Europe and all this crisscross mash of pipelines here, you can just tell how much greater infrastructure there is to get oil and gas from here into the main consuming regions. So you can hardly make out the countries because of the infrastructure network. So just compare that to the previous chart. And then Russia as well. I mean, it's just, you've got these big, large Soviet-built trunk line pipelines coming from the FSU down into Europe. And last year we had another one, the Nord Stream pipeline coming from St. Petersburg area down into Germany. And potentially they're going to build another one across here, across the Black Sea, up into Europe as well. So there's still a lot of infrastructure coming from the east to push that gas in and gain market share. And that will create problems for North African gas trying to get into Europe. So as we think about the market perception of North Africa and whether companies or investors are willing to really put a lot of dollars to work in this area, then these things do become important. I know David always tells me don't put geography over geology, but I think in this case geography does actually matter, because all of these things don't, I'm sure it's not going to be a surprise to anybody, but any of these transparency metrics which are available, you plot the world and you will see where Libya and Egypt and Algeria kind of sit here below. I've just plotted the median line in terms of the grey dotted line, and then picking off the North African countries. So I guess nobody's probably too surprised by that, but it is a concern for investors. Again, another metric which kind of comes out of this, which is in stability and non-violence metrics, plotting the world again. And again, we're all pretty familiar with where North African countries sit on this metric. So that, you know, these are headwinds. They definitely are headwinds here. So whether it's not just geopolitical risk, but fiscal take continues to be a big issue. I mean, management teams of oil companies today aren't simply out there saying, I will grow volumes. If they do say that, investors very quickly say, okay, what's the remaining cash flow per barrel you get after you do that, or how much is it going to cost to do that? So that's different than, you know, 5-10 years ago. Volume targets were appreciated and a big driver of share prices. Today that's not so much the case. It's about what are you left with after all the costs and taxes. And when you take a snapshot of the world and you plot ultimate fiscal take by country, and the blue circles being the average fiscal take across the world, so from like close to 100% down to like 30%, and then you think about Libya, Egypt, Tunisia here at the 70 to 90% level. So you're left with 10 or 30% of the barrel, of a $110 barrel to take home. And that's obviously not as attractive as even some of the new areas that we could categorize into North Africa here, Morocco, Deepwater, Mauritania. So again, if you're an oil company thinking about this, are you going to be swayed to put more dollars to work down here? And then, you know, it's not just those aspects, it's about other opportunities globally. And you all know about ranking projects and putting capital to work. And this is just the phenomenal revolution that's going on in the US. So 1920, up to like 10 million barrels a day, down to 5 million barrels a day in 2009. Suddenly, we're back at 7 million barrels per day of US oil production in 3 years. So all of those 28,000 companies that I've mentioned before in North America who wanted to venture out of North America and find hydrocarbons elsewhere, you know, suddenly they're all staying at home and they've caused 2 million barrels a day in such a short period of time. This is, you know, just simply the biggest annual growth spurt of production we've had in non-OPEC regions ever. So, I mean, it really is a phenomenal achievement. And some people, as you know, as we've talked about before, believe that that can continue for the rest of this decade, potentially longer. We don't actually fall into that category, and we think it might actually, you know, the growth rates will stop in the next year or two. But I guess that's quite, it's quite almost controversial today. But let's see. This is what they did last year, and that's phenomenal. But again, you know, whether you're thinking about North Africa or wanting to stay at home, certainly North America and put dollars to work in this is a real consideration here. And most of those US E&P companies who were in North Africa definitely kind of reconfiguring their portfolios to stay at home. So that's on the production. So I mean, there's positives and negatives in there. It's certainly not clear cut that this is going to be a major area of focus for the companies in the industry that we pay very close attention to. What about in exploration though? Because that can still attract these companies. You know, listed companies in the stock markets, you know, they will appreciate what moves their share price. And statistically, we've done this analysis, and you know, it'll be no surprise to you that if you find some oil, yeah, you could have a 5% move in your share price. So companies know that, and they will try and get as many prospects into their inventory as possible. You know, lots of corporate deals that you can do also create value. If you farm down your acreage, even get some new exciting license awards, farm-ins. All of these things create what's called positive alpha in terms of market capitalization. There's a lot of negatives too, and obviously things you've heard about, rights issues, capex going up, dry wells, acquisitions, all kind of balance this out. So, you know, this is something people have to think about going into North Africa. How many of these can they get versus all of the other risks that we spoke about. And I guess today the big investors are just looking for real alpha or real stock price movements, and you know, a couple of percent moves isn't really cutting it anymore. And you know, they get more excited about big moves like this, 10-20% moves. But you can see what's doing that is these big discoveries you've heard about recently: Johan Sverdrup in Norway, Zedius, French Guyana, Kurdistan, sub-Saharan Angola, kind of lower tertiary Gulf of Mexico, giving you those types of share price movements. And you know, the question is, can North Africa actually provide a prospect list as rich as some of these ideas? And you know, looking back on the last 5 years, you know, but it is, you know, if some areas in North Africa we will talk about in a second being frontier, and certainly that's a good area to be, because take the last 5 years, the average discovery size in frontier regions has been 700 million barrels versus 100 million barrels in the mature areas. So that, you know, the trends still make sense today. They've made sense before, and it makes sense to be testing new ideas, new concepts, and new plays in these particular areas. But again, people pushing the water depths as well. And again, the last 5 years, 1,500 meters plus water depth has delivered 600 million barrels on average in terms of discovery sizes, and kind of double what we find in the water depth before. So there's plenty of statistical data that says move offshore here and see what there is. We've shown this chart before, but I remember this period well when we kind of thought exploration is going to dry up and we aren't going to find anything after the late 1990s. And then we get Brazil. And then in the last 3-4 years, it's really interesting how we're just finding a real plethora of discoveries here at all various water depths and different plays really coming through successfully. So it is clearly a very exciting time for exploration. And that is why parts of North Africa still remain, well, they do actually remain very exciting to the companies. Let's look back at exploration over time. And again, I like to look at these maps because this is 1965 right up to 2005, and every wildcat well drilled over that 45-year period. And again, you'll see the natural concentration of wildcats in these 3 or 4 areas. Time and time again, though, it seems to be just going back and back and back to the same basins. You'll see little off here in kind of deep water Libya. You're not seeing much here off Morocco, just back to these same areas. And even then, when you look at the last 5 years, you're a little bit more in terms of deep water Libya. Still nothing really going on in Morocco, and people always going back to the same basins that have worked before. And that's where the last 5 years of wildcat wells have largely been recorded. So again, there's something preventing a lot of movement out of these basins into some of the other basins. And there are, I'll show you the basins in a second. So another way to look at this is, okay, what is the opportunity? Are these well-explored basins, or is, in terms of a global ranking? If we look at a big picture of the world and we kind of create a frontier wildcat index, or plot the number of wells drilled per 10,000 square kilometers, then you kind of see North Africa here at about 60, 70 wells per 10,000 square kilometers, and sitting in the middle of this chart. It's not like Azerbaijan, where I'm sure if any of you have been there, you'll know that you have nodding donkeys in the back of fast food restaurants and everything. You've got 3,000-4,000 wells here per 10,000 square kilometers. So we're sitting in the middle of this, which is interesting. But again, you've seen there's a big industry move into these 2 areas in particular. Morocco, Mauritania, hardly explored at all on the same kind of metric. This is where a lot of attention is certainly moving to, and you can see why. Over time, if we just look at North Africa itself, then the red line is the oil price, and the bars are the number of exploration and appraisal wells drilled by country per year. So we had a big push in the 50s and 60s, fell, and the oil price probably helped us out here in the late 1970s, 80s. It rose again, and oil price came off. You can see it kind of moving with the oil price, activity levels picking up as the oil price picks up. So we're, with the last few years, we've got back to those levels of like 250, 300 wells per year. But it is still the same 3 countries, Algeria and Egypt and Libya, that are dominating the wells. And back to the prior chart, it's those same basins. So really not seeing a lot of evidence here or any real materiality from some of the new countries, or some of the remaining countries in North Africa, or even some of the new basins. So if we look at the basins, then, I mean, I can count, I think there's about 60 of them so far in terms of what we've looked at. Been explored over the last century or so. And if you just plot them here by number of wells actually drilled, that's a log chart, and then we put our exploration success ratio over here on the other y-axis, then you get a sense of where success rates have fared, and they've gone from about, there are lots of zeros, but up to about, I think 60% something is the highest that we've seen in some of the Libyan basins. But interestingly, the top three here have really accounted for 50% of the historical exploration. So, and 75% of these basins have seen less than 100 wells drilled. So again, the whole picture remains the same, just a real concentration in the basins that have worked, and that's where a lot of this activity has centered time and time again. And plotting kind of the country's ultimate success rate over time just allows you to see where they've reached. So a very quick realization of the resource in Algeria, Egypt and Libya taking a bit longer to get up to this 45% ultimate exploration and appraisal success rate that they're all sitting at today. And Morocco sitting here, sub 20%, and clearly that's what I've been mentioning today. There is a refocus on this particular area. In 2013, 2014, we're going to see a lot of wells drilled in offshore Morocco, testing all the different reservoir intervals, chasing oil and gas. And it's going to be interesting to see where this number goes to when I replot the data in 2 years' time. I guess another issue, though, from exploration is when we look at the acreage. Yes, there's a bit of focus on Morocco, but it's still largely held by all the larger integrated oil companies, whether they're European or US or even Canadian here. So it's, I guess, from our perspective, expecting radical change or real announcements of big successes. We never see it as quickly in these types of companies as we may see in the smaller group of companies. That's just kind of natural trend, which I'm sure many of you appreciate how that works inside the companies. But it is largely dominated by the larger companies here in terms of exploration acreage. And then another real risk to dampening or mitigating the opportunity in North Africa is what's happening in the Eastern Mediterranean. You had the smaller companies in here. So we talked about the big companies holding North African acreage, not moving as quickly. In the Eastern Med, smaller companies have come in, taken all the acreage, and found 7 or 10 trillion cubic feet so far. And then what that's done is caused the majors to flock in, as they always do. And just the last month, we've seen Total and Eni take 15,000 square kilometers of acreage in this Eastern Med play. And that's what they're excited about, and that's where you're going to see them starting to do seismic and start to drill some wells, probably in advance of North Africa. And that's a problem because, again, we talked about this in the last East African day, but this East African LNG, or gas that's found here, if you turn it into LNG, it does become quite competitive versus all the other opportunities for LNG projects globally. This is a list of everything that people are trying to do globally. And every time a new project comes in, you work out the break-even gas price, and you slot it into what's a cost curve. And Eastern Mediterranean LNG does look very attractive. So the bigger operators, who are the companies who have to build these projects, the only companies who can build such capital-intensive projects, they'll be looking at this saying, why don't we just drill some more here in the Eastern Mediterranean? Because it certainly makes a lot more sense than Russia, Australia, Alaska, etc., etc. So again, it's about pulling away industry attraction from North Africa. One thing that is interesting, though, is unconventionals. I showed you the chart of the US, the 2 million barrels per day growth in 3 years. That's led by tight oil and shale oil. Naturally, everybody's looking for equivalents globally. Everyone has a view, but if you do start up with geochemistry and try and work off these and then look for similar metrics across what could make a good oil shale globally, and this is some work that we've, done with Neftex, and this is what we come up with. Very excited to see what happens here in this one this year, the Bashanov in Russia. But North Africa does have two, one in Algeria, one in Libya, which would be very prolific shale oil producers. Certainly all the data points to them being very comparable to things that we find in the Bakken and North Dakota. But again, it's really, an investor is going to think about this, think, well, that's exciting, but let's think about the risk, the politics, the infrastructure, the industry investment before like a financial investor is going to get super excited about this. So it's there, it's an opportunity, but people's timelines have, I guess they used to be much longer, they're increasingly getting shorter and shorter. So I've gone through this quite quickly today, but so all I'm trying to do here is kind of wrap up everything I've spoken about today and go through our North African countries here and these East Mediterranean countries and kind of just rank everything we spoke about, the resource potential, the exploration activity, the infrastructure options, the corruption, the stability, non-violence, the economics of the fiscal take, and kind of rank everything up together and just come to some rudimentary rating system for North Africa. And it helps us think about where the industry might go to next. And we come up, Morocco and Cyprus to us come up here. Algeria did come up quite high on this. Largely, the unconventional is there. That's the big one that we're speaking about. But again, as you've seen in the last 2 weeks, we've had serious bribery allegations going on in Algeria, and it's caused a lot of market value erosion in companies exposed to that. And again, that's, from my vantage point, that's something that lingers and takes a lot of time to actually dissipate. So again, when I look at this, and then I think about Egypt and Libya, they're ranking quite low for me, and I think of that, and I'm not expecting, and I know there's going to be more detailed talks coming after me, talking about exploration in Libya next, etc. But that's our view. That's how we see the state of play at the moment. They've got some positives, but there's a lot of negatives. Probably not one of the most exciting areas that I envisage for the industry over the next couple of years. So with that, I'm going to leave it there and take any of your questions.
Yeah, let's just leave it that slide up, Gary, if we can, for a minute. So, it's interesting. I guess if you listen to an exploration-orientated company nowadays, they're going to be concentrating on explaining to you how great things are on the left-hand two columns, I suppose. The opportunity is great and it's underexplored. And my sense is, and I think that's what you're saying, is that is less and less fitted with what investors are doing, which is concentrating on kind of the right-hand three, and broadly speaking, putting country risk in front of the opportunity. Do you think that's and that's a change, or is it a change in the last couple of years, or the last 5 years, or what?
It's taking hold slowly. You might have imagined it to take hold quickly after the Arab Spring period, but it didn't happen that quickly. But I think over the last 2-3 years, all of this is being bedded into market valuations, expectations, and much higher risk premia associated with investments in these countries. So I think the right-hand side of this table is becoming very important in terms of how the financial world is viewing this part of the world.
Okay, any questions? Terry Clint.
Good talk. I just question comparing Algeria and Tunisia on stability and non-violence. Tunisia right now is probably high risk. Algeria, I would have thought of the companies across North Africa, actually stability-wise, Algeria is lower risk. Yeah,
I'm taking those Transparency International metrics. They're not updated for what happened in January with Statoil and BP's field, or the recent bribery allegations. And so, you're right, but to do it all on the same apples for apples basis, I used the 2011 metric. But granted, yeah, it can change. I mean, I don't know whether it was David told me that, was it Nigeria used to be in the 1950s was a very safe place to go into, and Ghana was the worst place, and today it's the opposite. Yeah.
Okay, yeah, please.
I suppose two questions. One is, how do you see resource nationalisation changing in this area as a result of the Arab Spring period? Do you see that getting worse? And following on from that, what's the EOR potential, enhanced recovery in these areas? You know, with all of these existing fields, are we actually achieving a sensible rate of recovery, or is there an awful lot being left in situ for future revisiting?
Yeah. I mean, resource nationalisation in the last decade has been South America. And so, I mean, even though what you might think about Russia, it wasn't really resource nationalisation. It was just, you know, Rosneft absorbing UCOS. But, you know, no one else, okay, BP lost a gas field in East Siberia, but that wasn't really resource nationalisation. So when I think about that, I think South America was the worst example of that happening from those types of leaders. Hasn't really happened to a great extent in other areas. So I'm never going to rule it out. I never thought Argentina would do it last year, but she did. So you can never rule it out, but that's where it's been most heightened in the last 11 years. Enhanced oil recovery, yes. I mean, it's not just North Africa. Yeah, we see it everywhere. We see a little bit of capital going to it in each region. We see greater promises coming from it than we can ever actually see. That's the problem. You know, companies have spoken about it for many, many years. I'd love to see it more visibly in the results, and it just never comes. It's never, you know, unfortunately, just not material enough to actually come through in terms of the external data that we have available.
Okay, Ivan.
Awesome. Great presentation. A couple of questions going back to the slides of the companies chasing the same basins, let's say, or the same teams. Have you noticed or are you picking up signals that the new exploration strategies, let's say, today are actually targeting new, very, very different play concepts onshore North Africa than before? And if so, could you characterize a little bit, you know, where do you see this?
Yeah, I wish I could. I mean, I get this data from IHS, and I wish they had a category for new play that could do that, because I think that's a great question. I'd love to know the answer. It is true, it's happening, and you know, Morocco, people haven't been interested in Morocco, but they're targeting the Jurassic. I mean, Galp and Janelle, going down to the Jurassic, where, I mean, Esso did have a well in 1968 with oil, so it is kind of a new play, and so yeah, it's happening. The companies are talking about it. I mean, even for the likes of Total to stand up and say, you know, we thought exploration was much more difficult in 2003 to 2007, and then come out and say last year, actually, you know, there's all these new plays that we just didn't consider, and they've added like 19 new countries in the last a year and a half, and it's all new plays. I mean, they're going to kind of copy and Tullow. They're going to take stratigraphic fan systems and be the first to test it outside of the Atlantic basin. They're going to test it in the Black Sea this year. So all of that's true. It's happening. I just can't break it down for this particular region. I just haven't heard anything. I mean, I know it's being looked at in Brazil, but I haven't seen it being spoken about in terms of this region, not yet. Yeah.
Okay. Yeah, please.
Hi there. How do you see the potential for?
It would be good if you said who you were.
Sure. Hi, Nick Cobb Energy. How do you see the potential for shale gas and unconventional gas development in the region?
I mean, we looked at that in terms of the oil. So there's two big shales that look really prospective. And I mean, some of the big operators are looking at it, and some of the US E&Ps are also looking at it. So we're at that phase, or step one. We're kind of signing MOUs, and investigations will happen, and results will have to come next. So I mean, as I said before, investors' time horizons have narrowed substantially in the last few years, and what we're talking about here in North Africa I think is beyond that particular period. So from my point, it's a little bit too early, but the geology's there. However, all the things we spoke about are still valid. Infrastructure is the big bottleneck, and we'll need a lot more of it in order to get gas or oil actually out.
Okay, anybody else? Okay, Oz, as usual, lots of data, lots of insight.